Hello, Maverick Traders. This is Rob Reinhold, and happy Easter edition. So happy Good Friday, happy Passover, happy Easter, and any other holidays I missed. We are 1 week away from our 15th annual Maverick Trading Summit in Las Vegas. The topic is going to be using AI to make you a better trader. Now, for those of our Maverick traders who are not able to attend the live event, don't worry, we already are building videos and courses for you to basically see exactly what we're going to be discussing in the event. So we'd love to see it live, but if you can't make it live, we'll make sure that you have this information available to you. Let's go ahead and break down last week's news. And last week, the markets have stabilized. Now look, the volatility is still high, but we're not seeing any really big trends at the moment. What we're seeing is big up days, big down days, and in the end of the week, the markets haven't gone anywhere. Now look, I don't want to say haven't gone anywhere because that implies that they've gone zero. What I'm saying is we were getting plus 9%, down 9%, plus 3%, minus 8% weeks. That's what we've been dealing with over the past 2 months. And what's happening is we're now getting weeks that are plus or minus 2%, which in any other market situation is a big week. But in this market, it's just a lot less. So we're seeing volatility come down. And that last low is looking to be what I've been calling durable. So we had a VIX spike up to 40. And every time, I've been doing this a long time, every time the market has a big fall like it did, and we have the VIX spike to 40. Every time, the way I feel is this is going to get worse. It's going to get worse. That's how you feel every time. If you go by how you feel, you're going to make the wrong decision trading almost every single time. If we go back through all the times we've seen a VIX spike up to 40, it tells you that, hey, those are when market bottoms are made. Now, again, I'm not saying it is the bottom. What I'm saying is it's starting to look more and more like it is a bottom. And these bottoms with VIX spiking up to 40, they can last a few weeks. So we're now 2 weeks into this. I think this market bottom is durable at the moment. Now look at my next line on here. No reason to be bullish. I'm not saying I'm bullish here. But what I'm saying is it looks like all that panic, we had a washout, and I think we're back to a more normal environment. Now, we did get a big down day on Wednesday when President Powell came out and said that even the Fed was surprised with how big the tariffs were going to be. And because of that, it's going to likely to keep the Fed on the sidelines. Now, of course, President Trump did not like that, talked about firing him. Look, firing the head of the central bank, this is not a political statement. This is just a statement, is a negative to the markets. So if this is potentially down the road and that Jay Powell gets fired somehow, which is dubious as far as legal nature, but look, if that happens, that is absolutely negative for the stock market. We'll see what happens on this, but it looks like the Fed is definitely going to be a little standoffish here. So even though we got that news, the markets held in. They held in with all this news, and then we actually got some positive earnings out of Bank of America, Johnson & Johnson, Citigroup, Taiwan Semiconductor, but then we got a really bad miss by United Healthcare and also ASML, which is a semiconductor company. But this right here, this is something that I've been talking about for the last 2 weeks. We've seen numbers like consumer confidence falling badly. But the numbers coming out of the economy are still pretty good. Take a look at this retail sales report. And I talked about this last week. I said, I think this retail sales report is going to be a decent report. There's definitely a confidence issue in America. But if you go out, people are still spending. Not like they were, but they're still spending. And these numbers show this. And this is another number, unemployment claims, that I've been talking about. I expected this thing to go up to 260, 280, maybe over 300, which is recession territory. Look at this. So of all the layoffs we've been hearing about, it's not showing up. These are people that are filing for new unemployment claims, and it's been down in the low 200s, which is a very, very bullish number. So this is why when we take a look at the charts, I'm going to tell you I'm not as bearish as like a -3 or what the charts are at least scoring here. I'm not bullish. I'm not bullish in any way, shape, or form, but I'm not bearish. I do not think we'll see a new lower low here in the next 2 to 3 weeks. I just don't think we're going to see it. Here are the numbers for the week. You can see this is more normal. Dow down 2.5, S&P 1.5, Russell up 1.5. Gold continues to just crush it. Look, there's 3 reasons why people buy gold. Number 1, worry about the economy. Okay, that's happening right now. Number 2, worried about inflation. Hey, look at that. That happens as well. And also, it's inversely correlated with the US dollar. The US dollar crashed last week. Again, the US dollar is in a little bit of a free fall. That's why gold is doing so well. And as long as those 3 things hold up, economic uncertainty, inflation worries, and falling US dollar, gold's likely going to continue to go higher. But I really want to focus on this S&P chart. Now look, this is a bear market. We ran up. We have serious resistance here around this 5,500 area. So that's the top of my range here, 5,500. And you can see we had this huge bottom, and this huge bottom came on big volume. If you go back and you look at the volume that we put in off this bottom, you have to go back to like 2022 to see a bottom like that. And that also was when the VIX spiked up to 40, and that was also a very durable bottom at the moment. Look at this price action. It's not going anywhere. So there's no question this is not going to be your classic bear rally where you rally up and then you fall apart. I think this is going to take a lot longer and stay a lot longer in this area. I'm looking at 5,100 to 5,500 as really the area I think we stay in. You might even be able to bring this up to 5,200. But I think we stay in this area, which is slightly bearish. As you can see, we still have falling moving averages. We're still below the 50-day moving average. I'm waiting until we go up above the 50-day moving average to where I can say, okay, maybe we need to get back to a neutral. I still think you need to be net bearish. I still think that's where the market is. But again, I have traders that are saying, Rob, I think we're going to make another plunge down to 4,000. And I just am not seeing it at the moment. We come over here to the NASDAQ. It's really the same story. Really the same story. We're likely stuck here in this range. So I think there's some good trading to be had, but I don't think it's going to be real strong trends like we've had lately. Here's the 10-year, and this is the only thing I think that could actually change the story here. For me, as long as the 10-year stays between 4.5, 4.1, this market is likely going to be sideways. I think that's likely what it's going to be. If the bond yields go up above 4.5, we will make another new low. There's no question about that in my mind, at least for analysis, that if the bond market goes above 4.5, it means that there is a serious problem and we're likely going to go lower. Or if it goes down below 4.1, there's also a serious problem. If you're looking to be bullish in this market, you want bonds to stay exactly where they are, where the market is happy with them. Here is the heat map for the week, and you can see, other than the Mag 7, it was an up week. I mean, take a look at this across the board, and we're going to take a look at this in sectors. And you're going to see that outside of a few sectors, the market was actually more bullish than it looked. Again, another reason why I think you can't get too bearish at this point. So my market outlook is volatility stays high, 5,100 to 5,500. Yes, you still want to be slightly net bearish, but I think there's some good bulls that you can take along the line. And right now, tariffs are the number one worry. We've got that 90-day pause that started 2 weeks ago. Right now, countries are in individual negotiations with the U.S. government. Look, if let's say we hear that Japan has secured a tariff of 10% with the United States, that's going to be really good news. And the EU has secured a tariff and then exemptions of certain things. All of that is good news because remember, it's the uncertainty that the market doesn't like. Look, the market doesn't love tariffs. It doesn't love the tariffs. But as I've been saying for the last couple of months, if they just put 25% tariffs on and then shut their mouth, the market would have gotten over it pretty quickly. and the economy would figure out how to run with the 25% tariff. But the uncertainty, the changing it here and there, that's what's been negative. And once we start to get some resolution to that, the market is going to like that resolution, even if it ends in tariffs. The market's going to love it. Also, we are in earnings. And this is one that I think that earnings are likely to be more negative than positive. I think the companies are going to come out with good numbers. I think numbers are going to be good, but I think the commentary is going to be, hey, we don't know what's happening. So I think the earnings could be a drag as well. As I said, ultimately, this is still a bearish market. You cannot get bullish here. Just right here, right now, I think we got to be aware that it's not all these really panicky signals are going on. It's more, hey, we had a big fall. Let's see what happens next. That's where we are. Next week, there's not a lot on the calendar. Durable goods orders is probably what people are going to look at the most on Thursday. Consumer sentiment on Friday. I think everyone already expects this to be terrible. I don't think it's going to be a shocker if and when it is terrible. So I think the durable goods orders are going to be, okay, are people actually cutting back? That's what we are waiting to see. So as far as market outlook, I've got this as it should be -3. There we go. We have it corrected. This is a -3 market, but look, I don't think you get too bearish, and we're going to talk about that when we get into our trade slots. Let's go take a look at the sectors quickly. Take a look at exactly what happened last week. And this is where I said there's some decent long trades out there. Utilities had a great week. Real estate had a great week. Consumer staples. These were our 3 strongest sectors, and they're working nicely here. Big question is, do they still work if the market rallies? And these are defensive in nature, so maybe these aren't, if the market is going to go higher, these are probably not the best sectors. So what were the best sectors? Industrials and financials. They really outperformed the market last week. Remember, the S&P was down 1.5%. Look at this. These were flat for the week. This is where I like bullish trades, right here. Industrials and financials acted very well. But consumer and tech, it still looks really weak. Same with comm services. They still look really, really weak. I think you can make both good long and short trades here as we churn in this area between 5,100 and 5,500. Let's score them all from +3 to -3. Utilities is between the moving averages. That gets it a 0 every time. We've got communication services, was a -3, stays a -3. This is not, I'm really going to focus on the last week, which was 4 days of price action. And you're going to see this wasn't good price action here out of comm services. But we come over here to real estate, look at it for the last 4 days. Hey, those good price action here, and it's brought us all the way back up to that 20-day moving average, so we're going to bump that up to a -1. We come over here to healthcare. These 4 days, not great days. Not great days, especially this day on Friday. We lost all of our gain, so healthcare is going to stay -3. Coming over here to industrials, we got a gap up on Monday. We faded off, but this doesn't look too nasty. But nothing changed. It's still a -2. So look, it's still a -2. Financial, same thing. We gapped up. We faded a bit, but that really held on pretty well overall. But not consumer. Look at that. We gapped up and then we lost it all and more. We closed below last Friday substantially. So consumer was a -3. It stays a -3. Consumer staples, it's going to stay right there at 0. But look, if this thing can move up a little bit, I'm willing to go bump this up to a +1 or a +2 to the upside. So there's buying here in this sector. Technology was a -3, gapped up, spent 4 days just selling off. Not great price action here, especially that candle on Friday closing at the lows. Materials. Hey, this is looking much better than what we just saw in tech. Problem is, it is still a weak sector, still a -2. But if you're looking at another sector that possibly is showing some signs that it wants to grind higher, materials is flashing it as well to me. And here's energy. Energy had a good week last week, no question about it. It actually had a nice close on Friday, but that does not change the fact that it is a clear -3. We need to get above this 84 before we can even look at bumping this up. So last week, this is where we sat. We had 2 sectors that got a bump up, and that's it. So this is where we are. These are the strongest sectors, and it makes sense. These are defensive sectors. These are sectors that typically do better than everything else when the markets are falling. If the markets rally, these probably don't do the best. They're going to be fine, but they're probably not going to be the best. I like financials and industrials. Those are the ones that are holding in the best to me. So let's take a look at the trades we had roll off. We had a lot of trades roll off last week. We had 7 trades roll off. We had 3 roll off for max gain, 2 roll off for max loss, and 1 go for almost max gain, and another one for almost max loss. So overall, we had 4 winners, 3 losers. Again, we're just plugging away, and hopefully having more winners than losers. So we have a lot of slots available. Things have dropped off substantially. We're still at a -3. We can't change that. So I talked about this last week. With this slot strategy, remember, you can still have some discretion in here. For me, I'm looking at this saying, I want to use my discretion to not fill all of the most bearish spots. And I'm going to use my discretion to actually fill up some of these over here. So I am going to add 3 bulls this week and only 3 bears as well. So I've got 3 bulls going on this week. I've got 3 bears going on this week, and I've got 1 sideways. So as you can see, I'm not getting more bearish. I'm getting neutral here. And I'm getting neutral strategically in some places. I want to just point out this industrials. This industrials is going to be counter trend to its sector. I fully understand that. I'm doing it for a reason. If the markets rally, I want to have something outside of utilities, staples, something that is a little bit more cyclical that will do well. So I'm going to throw in a trade in industrials. So let's go ahead and look at some of those potential trades in those sectors. First up, in utilities, my hands were a little tied in this one. Utilities is not a large sector. I think there's like 28 stocks that fit my volume requirements. And out of those 28, only about 3 or 4 have weekly options. We just had April monthly options expiration, and I don't want to go all the way out to May. I just don't want to go out to May. That's too far away from me in this current environment, but I do want to get exposure to utilities. A lot of times when you do sector analysis where you make your trades based on the sector, top down, not bottom up based on the stock, all of a sudden you've predetermined there's a lot of stocks you can't trade. And so this is the best of the utilities trades that have weekly options. I don't love this chart trade. I don't love anything about it, but again, I want to get slightly bullish exposure to utilities. I could just do the XLU, which I could absolutely do, but I said, okay, look, this one is actually decent. I'm not asking it to do much. As you can see here, again, this is Pacific Gas and Electric. Of course, yes, they've got some issues with the fires that just happened. We just bumped down, but look, we've recovered right back up. We are right up at that 1750 resistance. So the trade is going to be, you know what? I'm going to give it 2 weeks. All I'm saying is I think in the next 2 weeks, it goes up above that 1750 and holds it. That's the trade. I don't love to do 50-cent spreads because commissions can actually get quite high when you have to buy a lot of contracts if you're trading a larger size account. But this is the only trade that works. Like I said, if you don't like this one, just go slightly bullish in XLU and you'll have about the same thing. Next up, comm services. This is sector I want to get more bearish on. So I'm looking to go in Zillow, and I'm looking for things that didn't have good bounces off the bottom. And that was my criteria. I wanted to find stuff that was in clear downtrends and didn't have a good bounce off the bottom. Now remember, we've had a good bounce off this bottom. Zillow? No, it is not. In fact, Zillow's more low basing than bear rallying. And that's telling me that the buyers aren't coming back into this one. And so I want to get bearish. Now, again, this one is a -3, so I'm going to get the most bearish I can. I want to give it some more time. I'm going to go out to the May 16th. I am willing to go out for the month, and I'm doing the 62.57. This is all the way down here. I think it goes lower. I think you could easily draw a trend line here and say 55 is a target, but I like to get less aggressive than my most optimistic target. So for me, I'm going down to 57, 62.57 here, to get more bearish -3 in the communication services sector. Industrials, we've talked about it. It's a bearish sector, but I want to get bullish in it. So I found the best looking trade in there. This is Fastenal. They just had earnings. It pumped them up, and now we're hanging out right here at this resistance level. And look at this high base. Nice high and tight base. These are one of my favorite patterns. I just want to get long, and I think this thing's going to break out, and I think it could run up to 85. So that is going to be the trade here. 80.85. I fully understand that if this market rolls over and dies, this is a loser. For sure, this is a loser. If the market rallies and a lot of money goes back into industrials and financials, which I think it is, this could be a really nice trade that will definitely more than offset any losses we take on the bearish side. So I like this one out to May 9th, so 3 weeks out. We've got consumer staples. I also want to get slightly bullish in this one. We've got Dollar General. This thing has been bucking the trend. If you take a look at a long-term chart on Dollar General, if you go back the last year, it's had a rough year. It's definitely had a rough year. And it's recovered. And you can see, pull back. We got a nice candle on Friday. Nice candle on Friday. I'm not going to ask this thing to do too much. I only want to be at a +1. So I'm going to do this 1 week out. I'm going to do the 92.95. 92.95, 1 week out. Give me up to that resistance, punch up above it. I'll go ahead and cash out, and that'll be a nice trade for us in this sector. The reason I'm going April 25th is that I'm putting a lot of trades on this week, but I don't have many trades on from the previous weeks. So I'm trying to fill in a couple more trades in this next week because I just don't have much exposure to this next week. So I'm going to be throwing on a couple that expire just in 5 days here. Next up in technology, I want to get more bearish here. Same thing in Zillow. I want to find something that isn't bouncing. Here is SMTC, semiconductor company. You can see there's no bounce here. There's no bounce whatsoever. So while the market was bouncing, this thing just went sideways, telling me that there's really not buyers here rushing to get into it. Even when the money surges into the NASDAQ, it's not going here. Not going here. I want to be at a -3. I'm looking to be aggressive on this one with a -3, so I'm looking to 26.24. I think it's going to go down to 22. That's the trend line next target, but I'm going to be less bearish than that. 26.24. That'll still be a really nice trade on a risk-reward basis. Materials, I want to be at a 0, at a neutral, and came across U.S. Steel. This is another sector that there's not a lot of stocks in the sector, and then if you want to do weeklies, all of a sudden, there's not a lot of weeklies either. This one, I'm looking at this, and I do like this. I'm looking just to make this again. I want to fill more slots in the April 25th. I want this to be an April 25th trade. So I'm looking at this specifically to Friday. I'm looking at this range here, 40 to 46. And I like this midpoint of 43. That's a trade I like. The 40, 43, 46. This is slightly bullish. This is actually going to be closer to a +0.5 or maybe even a +1. I am putting a bullish tilt on this butterfly to where the profit area is probably going to be somewhere about 41.50 up to 44.50. This is probably the real profit area. So I'm slightly bullish here on this one, just again for this week. And then the energy sector, it had a big bounce last week, but it's still at a -3. I'm going to treat this the same way. I'm going to say, yes, the energy sector had a big bounce, and I think it's going to roll over. Now, it hasn't rolled over yet, but I think it is going to roll over. I think this is a bear rally. I could be wildly wrong, but that's why we use stuff like spreads to where we have limited losses, and we do our position sizing correctly. This is ripping higher. We plunged, made a new low all the way down to 115-ish, and we've rallied up to 135. So we've gone 22 points. Do you realize that that is about an 18% move from the bottom? I would love to try to do the same thing that I did with Zillow and with SMTC, where I found weak stocks that hadn't bounced back much. The problem is in the energy sector, all the ones that hadn't bounced back much did not have weekly options. And I don't want to go all the way out to a month on this as well. So again, I had to go with what I could actually trade, which means I had to find something that was having a bear rally. So that's what I'm going with, bear rally. I'm looking to be to -1. I'm looking to fill in some more of these April 25 slots because I think I have one trade rolling off next week. So I want to put some more out there to try to generate a little bit more income. Look, we are at this resistance area right in here. This is where it technically should turn over. But right now it's got a ton of momentum to the upside. So we could easily blast up into this low 140s before we turned over. And if that happens, that'd be great. But here's the problem. I'm looking to put on the April 25th. That's what I'm looking to put on. I've got to put this on early Monday. I just have to throw it on and cross my fingers and hope and pray that it does a bear rally this week and I get a nice return out of it. If you want to get a little bit better entry price, just go out a week. I've already got a bunch of stuff expiring May 2nd, so I don't want to add to that. But look, I would say if you have a little bit of time, let this thing roll up into this 140. Take a position up here at 139, 140. Then give it 2 weeks to drop. That's going to be a much better trade. But since I am trading my slot strategy, I have to find something that fits in my slot. So I'm going to just do this April 25th, 135, 140, and hope we get a bear rally sooner than later in the week. All right, let's wrap this up. I expect the volatility to continue, but I don't think we're going to ultimately go anywhere. This range, 5,100 to 5,500, is 8%. So we could go up 4% in a week and nothing happens technically. We could go down 4.5% in a week and nothing happens technically. So I think this is going to be a big range, but I don't think ultimately goes anywhere. I do think we have this, again, the VIX spike, and whenever the VIX spikes to 40, I get it spiked to 40 because people are kind of freaking out. And that causes people to be hesitant. And for the last 2 months, I have been saying cash is a position. I erased that this week. Why? Because I think we're at a point in the market where the VIX spikes and the crazy volatility is waning. And I think you want to actually start to becoming more active. I've said cash was a position because, hey, it's pretty crazy out there. If you're not comfortable with it, stay out. Cash is a position. Now at this point, I'm saying, hey, that cash on the sideline, I think it could be earning some more money. Let's start to put it to work. Again, there is no bull market. I'm not saying put it to work, meaning the S&P is going to be higher in a year. I actually don't believe the S&P is going to be higher in a year. What I'm saying is put it to work as a trader. If you've got investment funds, keep it where it is. Keep it where it is until we get a little bit more clarity to this. All right, thanks for joining me. Everyone have a great weekend. Goodbye.